Baghdad, New York, September 21st, 2025. A wave of excitement and speculation has erupted in financial circles after reports confirmed that the Iraqi Dinar IQD is now actively trading on major Forex platforms worldwide. A recently leaked internal bank memo, allegedly circulated among senior staff at leading U.S. institutions, has only fueled the frenzy, revealing instructions on how to prepare for a sudden influx of IQD-related transactions. For years, the dinar was relegated to backroom discussions, private exchanges, and hopeful chatter among investors. Now, with official signs of trade-in integration, Iraq's long marginalized currency appears to be stepping into the mainstream global economy, a move with enormous implications for investors, Iraq's economy, and global markets. The leaked bank memo, reportedly originating from U.S. financial institutions, paints a startling picture of what's unfolding behind the scenes. Key elements include IQD trading pairs activated, references to IQD, USD, IQD GBP, and IQDE, UR pairings on international Forex networks. Operational readiness, internal guidelines instructing staff on how to process large volume dinar exchanges, including compliance measures and anti-money laundering safeguards, confidentiality clauses, mentions of non-disclosure agreements, NDAs for certain clients, hinting at private contract rate negotiations outside of the public Forex marketplace. Timeline coordination, suggestions that banks have been preparing for this rollout for months, aligning with central bank and regulatory oversight. If this document is authentic, it indicates that the dinar's shift into Forex trading is not an accident, but rather a coordinated financial strategy between Iraqi authorities, U.S. regulators, and major banks. The integration of the dinar into global Forex platforms has already begun reshaping trading strategies. Liquidity surge. Forex brokers are reporting unusual spikes in trading volumes tied to the new IQD pairs. Both institutional and retail traders are rushing to secure positions before rates adjust. Volatility concerns. With the dinar's exchange rate still in a price discovery phase, sharp swings are expected as the market balances between speculation and fundamentals. Speculation? Boom! The dinar is quickly becoming a speculative favorite, reminiscent of the early days of cryptocurrency trading, where fortunes were made and lost in hours. Potential basket effect. Analysts are watching for parallel movements in other undervalued currencies, particularly the Vietnamese dong VND, which may be included in a broader revaluation basket. Traders note that this event could become one of the largest currency shocks of the decade, with ripple effects across commodities, equities, and global banking systems. For Iraq, this breakthrough is about more than financial speculation. It's a matter of national credibility and economic sovereignty, legitimacy restored by entering global Forex markets. Iraq signals that it has moved past decades of financial isolation and instability. Stronger trade channels. Iraqi companies will now enjoy smoother trade flows, as their currency is officially recognized on global platforms rather than limited to cash-based or informal exchanges. Boosted foreign reserves, with oil exports still the backbone of Iraq's economy. A stronger and tradable dinar means the country can accumulate higher value reserves, strengthening the central bank's hand. Investor attraction. The ability to freely trade IQD will likely attract multinational corporations, private equity funds, and foreign governments seeking new opportunities in Iraq's reconstruction and growth sectors. Geopolitical weight. Iraq's stronger economic standing could translate into increased influence in OPEC negotiations and regional alliances. This is the most significant financial leap for Iraq since the fall of Saddam Hussein, marking a true shift from a war-torn economy to a globally integrated market participant. The news has created a storm among private IQD holders, many of whom have been waiting for this moment for over a decade. Early adopters rejoice. Investors who purchased large sums of dinar in the 2000s at near-worthless values may now be sitting on fortunes. Retail confusion. Ordinary holders are scrambling to understand the difference between Forex-listed rates and the rumored contract rates available. Through bank-run redemption centers, institutional entry, hedge funds, and wealth management firms. previously dismissive of the dinar story, are reportedly examining exposure opportunities. Risk of misinformation, the sudden rush of rumors, social media chatter, and unverified claims has made it difficult for smaller investors to distinguish fact from speculation. Financial advisors are urging caution, warning that taxation, compliance, and liquidity management will be critical challenges for new millionaires created by this potential revaluation. The dinar's inclusion in Forex trading has implications that stretch far beyond Iraq and its investors. Challenge to the dollar's dominance, some energy analysts suggest Iraq may eventually price a portion of its oil exports in IQD rather than US dollars, echoing moves by Russia and China to reduce dependency on the greenback. Regional currency rebalancing. Iraq's sleep could embolden neighbors and partners to push for their own adjustments, especially countries with undervalued or tightly controlled currencies. Emerging market surge. Investor appetite for undervalued currencies in Africa, Asia, and Latin America could grow, sparking a wave of speculative inflows. Central bank pressure. The IMF, U.S. Federal Reserve, and European Central Bank may need to react quickly to ensure global liquidity stability amid sudden wealth transfers. Oil market disruption. With Iraq among the top oil exporters, a tradable and strengthened dinar could affect how energy contracts are structured worldwide. Economists argue that this could be the largest currency event since China's yuan reforms in the early 2000s, one with the potential to reshape global finance for decades. Confirmation that the Iraqi dinar is now trading on global Forex platforms has transformed speculation into reality. Supported by a leaked bank memo and signs of U.S. financial coordination, this moment marks the beginning of what many believe is the long-promised RV rollout. For Iraq, it represents a powerful step toward restoring credibility and securing its place in the global financial order. For investors, it is the payoff after years of uncertainty and skepticism. And for the world, it is the start of a possible currency realignment that could rival the great shifts of the 20th century. Still, major questions remain unanswered. Will Forex rates match or diverge from private contract rates? How quickly will Iraq's central bank stabilize the new system? Could other currencies follow, creating a domino effect across global markets? One fact is undeniable. The Iraqi dinar has left the shadows and joined the global stage. What was once dismissed as mere speculation may now be unfolding as one of the most consequential financial stories of our time.